Hi, everybody. All right, we're just going to take a minute or two. I started a minute or so early, so I'm going to take a minute or two to let people into the room before we get started. Thank you, everybody, for joining today. If you have any questions, you can see the chat box down below, and you can ask me any questions in the chat box, but I see people slowly coming in. 8. I see people slowly coming in. And thanks for joining on this very snowy day. Yesterday was beautiful, and then we got this snow. Tell me in the chat box where you're joining from today. That's right. Hi, everybody. Just letting everybody join. Just giving it a few minutes. Oh, there's a question. Chat is disabled. Oh, no. Okay, hold. I think you should be able to ask in the question and answer chat box. So let me type my answer. Did you get this? Hi. Oh, hold on. Let me go back in. Chat box should not be disabled. I would have to exit and then redo chat box. So if everybody can ask me the questions in the question and answer. There we go. In the question and answer box down below, you'll see the question and answer box. You can ask me questions in there. Thank you, everybody, for joining. Okay. So I'm just going to get started and share my screen. Oops. 1 second. There we go. Sorry. Thank you, everybody, for joining. Sorry, I'm going to go back and share my screen here. Okay. It's just that sometimes when I share my screen, I cannot see the chat box. So I'll have to come in and out. Sorry. All right. Let's get started because it is 11:02. Okay. Welcome, everybody, to the Private Lending Masterclass, episode 1, From Decline to Done, the Private Lending Playbook for L2 Agents. So this is going to be about a 45-minute webinar, and we'll have 15 minutes for question and answer at the end. But before I get started, I have to read our disclaimer. So if anybody wants to take a snapshot of the disclaimer here, but I'll read it out. I'll read out our verbal disclaimer just so we get covered. All right. So before we begin, I want to quickly review an important disclaimer that's on your screen. This webinar is for educational purposes only. The information I'm sharing today does not constitute financial or legal advice, and attending this session does not create a broker-client relationship. As licensed mortgage professionals, you're responsible for exercising your own judgment and ensuring compliance with FSRA guidelines and your brokerage's policies when working with clients. The scenarios and strategies we discuss today are general examples. Every client situation is different, and you must assess individual circumstances and suitability before recommending any solution. Interfinance lending criteria and products are current as of today, but are subject to change. Always verify information before submitting deals. If you have any questions about regulatory compliance or professional obligations, please reach out to FISRA or your principal broker. All right, now let's dive in. That was good, right? Compliance is out of the way, and now we've done the disclaimer. So, hi everybody again. I'm Stacy Brown. I'm the Business Development Manager for Interfinance. I am a mortgage agent level 2 agent. Give you a quick synopsis about my background. I've been in the mortgage industry for a very long time. I was the national BDM for the CIBC brand across Canada, and I had the CIBC brand, President's Choice Financial brand, for 3,000 brokers across Canada. And then I went to MCAP, where I was the regional account manager there. And then if anybody remembers Street, I was the regional vice president there at Street years ago. So since then, I was a broker. Now I'm back on the lending side, and this has been a great experience wanting to put together a private masterclass or masterclass for private lending for brokers, because I get a ton of questions for new agents that hasn't done a private deal as of yet, and they're still kind of nervous to approach the clients about private lending. So let's dive right in. Does anybody have any questions? As I said, please put it into the chat, and I'll get to that. Okay, so who is this masterclass for? This masterclass, as I said, is for L2 agents who just received their license. So any new agents, licensed agents who haven't closed a private deal yet, or anyone who wants to confidently turn bank declines into closed deals. So you could be an L2 agent and you've been an L2 agent for a while, but you really still haven't dived into the private lending world. What are we going to learn today in our masterclass? What makes a deal private? How to start the conversation, which is a big one that I find with a lot of new L2 agents. How do you even approach private lending? And how to choose the right private lender? And this to me is one of the most important ones, the front end and versus the back end. What does that look like? And why is that important? So I would say that, I don't know if you guys have experienced this, but the old way of thinking about private lending was like private lending was the last resort of any deal. This is the last place that you wanted to take a client, and therefore you approached the deal like this was the last place that you wanted to take the client. So the thinking was, my client got declined, I guess we have to go private. Womp womp, right? But that's not the way that we should be thinking about private. Private, the new way of thinking is, my client needs a strategic solution the banks can't provide. Let's use private lending to get them where they need to go. This is a solution to a challenge that they're experiencing in this moment in time. It is not that this is like the worst thing that has happened to them, right? Here's the truth though, private lending isn't a failure. It's a strategic solution for clients outside of the traditional lending box. Because let's face it, there's so many Canadians now that are outside of the traditional lending box. And does that mean that they are not entitled to lending solutions for them? No, right? What makes a deal private? What makes a deal private is a deal becomes private when traditional lenders can't or won't approve it, not because the deal is bad, but because the deal doesn't fit their box right now. And because if you've been in the industry for a while, you'll see that a lot of the lending guidelines have become more strict, right? So does that exclude so many Canadians that need lending? It can be, because you have to remember, banks lend based on their policy for that specific bank. Private lenders like Interfinance, we lend on equity and exit strategy and common sense. Exit strategy is a big one. And does it make sense for us, right? Does it make sense for that private lender? I am just going to check the chat box for 1 second, because when I'm on this full screen, Sorry, just 1 second. I'm just going to check the chat box just to see if there's any questions. Where are we? Okay, no questions in the chat box. I will continue. So here's what is the 5 most common private deal scenarios. These are the scenarios that I've seen come across my desk, and I see that a lot of L2 agents are experiencing these types of scenarios. So let's address the 5 most common scenarios. Bank policy decline doesn't fit their risk appetite. The client is solid, right? But the bank says no. And we get this a lot, right? So who are these clients? These are the self-employed income clients that doesn't meet their checklist, non-traditional income sources like rental, investments, dividends, contributory income, or contributory people. Recent credit inquiries or small blemishes that are already been resolved, such as bankruptcies or consumer proposals that may have just been resolved, and so it doesn't have the time frame yet that they need to bring them back to the A or the B side. The property type doesn't fit their appetites, like certain condos, the condo market right now, right? So what we have to look at, these are risky clients. They're just not where the banks want to lend at the current moment, and maybe outside of the bank's appetite. Scenario 2, this is a big one, time-sensitive deals. Speed matters more than rate, which is, I've seen this come across my desk many times, where we have estate buyouts for a client, power sale situations, family disputes. You'd be surprised to know how many family dispute files that does come across my desk. Bridge financing for time-critical opportunities, purchases that are quick closings, because the client is taking care of an opportunity that may have just landed in their lap, and they need a quick closing on this. Whereas sometimes the traditional forms of lending, which could be an A or a B or bank, they may take 30 days to 60 days to be able to close that deal. Quick closings doesn't necessarily fit into a bank's lending time frame, right? So your client needs approvals now. Whereas we can look at a deal and look at 24-hour approvals as long as the appraisal is complete. So we don't take months or days or weeks. We can look at something, and within 24 hours, we can give you a solution. Scenario 3, which is also another big one, high net worth clients, because people think that it is clients that are not high net worth that are coming to private lending. That is not the case at all. So you're going to look at high net worth clients with temporary cash flow challenges. That does come across our desk. So business owners with irregular income patterns, asset heavy finance families with owned property worth like 2 million and above, income shows not what their properties are worth, so 80K or below, retirees with substantial equities in their homes but minimal declared income because they're on pension, right? Scenario 4, credit transition periods, which is like temporary setbacks on their credit. So recent bankruptcies, consumer proposals, as I talk about, credit rebuilding phases. So the client may have had some missed payments on their credit, and now they're in that situation where they're rebuilding, they've addressed everything, or the private deal is the solution to get them back on track to pay out all of those debts that they may be owing, and then therefore their credit scores will then increase, right? Here's the truth. They're not in distress, they're just in a transitional phase, and this is where private lending can help bridge that gap. Scenario 5, bridge scenarios. How many brokers have come across a bridge scenario that the banks can't do, and you need that bridge scenario to close this deal? This is where a lot of private lending can be a great solution for your clients, right? So it's not a problem, it's just a timing issue right now. What I would like to do in this masterclass is really change the mindset of what we think about private lending, who is private lending, what clients are doing private lending, and how to position that correctly to clients so that they're not thinking private deals are bad. Like you're not a great client because you had to get a private deal, right? Because private deals are a great solution because it provides flexibility, speed, and asset-based underwriting. So let's start that conversation. What does that look like, right? What does having that conversation with clients? I've seen with new L2 agents, they don't know how to start this conversation. So what do most agents do? They kind of apologize. They're like, I'm sorry, I got to take you private. Or the client is talking to them, is there any other solutions, because they just got a decline, and you're kind of hesitating around the solution of, we need to go private on this deal. What does private lending look like? So let's fix that today. Let's change the mindset. Let's change your wording on how you're positioning private lending so that you're not apologizing, you're not hesitating, you're talking to the clients in confidence, right? Like you're saying, no, private lending, this is a private lending deal for this reason, and we're going to get you that solution today. So here's some of the things that you shouldn't say when it comes to private lending. I'm sorry, but we have to go private. Womp womp. The bank declined you, so now we have to use a private lender, right? You're not good enough for the bank, so now we got to go over here. That's not where we're trying to position the client. Or saying, this is just your only solution. Like, you can only go private, right? The rates are high, but. So you're not saying this in confidence, right? So what should we be saying? How should we be approaching private lending when you're talking about a solution to your client? So instead, you're going to say this: based on your situation, here's what makes the most sense, right? Because this is what's happened, but this is what makes the most sense now. And it's a good solution for the client now. Let me show you the strategy that's going to help you get to your goal fastest. Because a lot of times, as we talked about in our previous slides, it's about time sensibility, time that it's going to cost them this X amount of dollars versus this X amount of dollars if they're able to close the deal in a speedy way. We have a solution that prioritizes what matters to you most right now. Is it an estate deal that this is going to get them their parents' home, and then they can figure out what to do with the home after, but at least now they own the home, right? So why this works, why we're saying we're not going to go backwards. We're not going to say, I'm sorry, the bank declined you. By the way, you can take a screenshot of the next page or of this page. We're not going to be apologetic. We're going to talk about it in confidence. We're going to say, no, I got a great solution for you. This is what's going to help you get to your goal fastest. So you're repositioning yourself as a strategic advisor, not just an order taker, not just saying, okay, well, you didn't get this, so I'm just going to do this for you. So here's the script that we're going to talk about when we're talking about private lending and acknowledging what the clients need as a solution for them currently now, right? So you're just going to acknowledge their situation. I know the bank declined your application. That doesn't mean you're not creditworthy. It means your process couldn't capture your full story. What does that sound like? So you didn't start off saying, well, I'm sorry, we have to go private. You're acknowledging that the bank declined them, but it doesn't mean that this is the end of the road. I still have a solution for you. So you're explaining why private makes sense. Private lenders look at your equity and your exit strategy, not just your income on paper. In your case, you have, for example, you have $400,000 in equity and a clear plan to sell in 8 months. That's a strong deal. So you're reinforcing their decision, you're reinforcing their goal, and you're putting private lending as a solution to their goal. So this is the other big one that we talk about, right? The rate. How do we talk about rates in a positive manner? So you acknowledge it. And I've learned this trick by saying yes and. So they're like, oh, that rate is high. Yes and. So you'll say, yes, and the rate is high, or the rate is higher than the bank, around 6 to 8%. But guess what? This keeps your income. This keeps your home, avoids foreclosure, gives you time to execute your plan. When we look at a 6 to 12 months of your interest versus losing your 400K in equity, the math is clear that it makes sense for this client at this time that private lending is a solution for them, right? And then you're going to look at part 4. Presented as a bridge, not like the end of the graveyard, right? Like this is where things go to die, right? Like this is not the end of the road for the client. So what we're saying is this isn't forever. We're using Interfinance, for example, for 6 to 12 months while you sell the property or improve it. They're going to renovate it, whatever the case is that they need. They need their income taxes to come back in because they're waiting on that. And then we'll refinance you back to a traditional lender at a lower rate. So this provides a stop measure gap for them at the current moment, and then they can go back to a traditional lender, or you'll be looking to take them back to a traditional lender, right? So we're going to address some of these concerns, right? So the client's like, no, that rate is too high. I don't want that. So you're not going to start off by saying, oh, but I got to take you private. That's where we have to go. No, you're going to acknowledge again. Be confident in your acknowledgement. Yes. Acknowledge, yes, the rate is higher. So your response could be, I understand. Let's look at what you're actually paying. Do the math for them and actually show them those numbers on paper. I find that when clients actually see the numbers versus what they could be losing, it does help reinforce their goal, right? So let's just say, let's look at what you're actually paying. On a $300,000 mortgage, Interfinance on our first, we start at $699 for 12 months. Your total interest cost is about $20,970. That's $1,747.50 per month. Can they afford that? Now, what's the alternative? Losing the home, damaging your credit, walking away from all of that equity that they have in their house. When you compare 20,000 or 2,100 or 21,000 to 400,000, you can say which option protects your wealth. When you position it that way to the client, the math can be kind of clear, right? And then the clients may say to you, well, I don't want to feel like I settled, or it's like I'm doing, it's not what everybody else may have gotten. It's not what my neighbors may have gotten, or my parents, right? So let's address that, right? Acknowledge what the client is saying, but your response can be this. This is not settling. This is a strategic financing solution. Some of the wealthiest people I work with use private lending because it's fast, flexible, and it gets them where they need to go to. Banks are great for standard deals. Private lenders are great for smart deals that need speed. So you're acknowledging the fact that, hey, you haven't failed, and why this is still a solution for them, and why some of the wealthiest people have used private lenders to close their deals, because it is a great strategic solution. Another objection that I do come across, what if I can't refinance out in 12 months? How many times have we heard this, right? Like, what am I going to do, right? So your response should be, or can be, that's what we build. That's why we built a clear exit strategy from day one. I would always say, and this is what every private lender wants to know, what is the exit strategy? So when you come to a private lender, you have discussed with the client, what is the exit strategy going to be on this file? So with your client, you're going to say, we'll work together on credit repair, income documentation, because they needed to get their income taxes done to show their investment income, or whatever the case may be. They're putting their property up for sale. And you're going to reinforce the fact that you're going to stay with them through the entire journey. They're not alone going through this process. So it's not like you're handing them off to a private lender and the client is never going to see you again, right? Because if you show them there is a plan to execute at the end of the 12 months, they also know that they have somebody to lean on, ask questions, and follow up with to make sure that they're following the plan that you guys had come up with as an exit strategy. Here's a pro tip. The best agents don't sell private deals. They position them as the obvious solution given the circumstances. And how do they do that? With confidence. I always find, when somebody walks into the room and they're confident and you can automatically read that, like you get that person comes off very confident to you. Well, that's you positioning this a private lending deal to your clients, because confidence is contagious. If your clients see that you're confident in this solution, they become confident in this solution, right? All right, we're going to go into module 3. And I find that this is a great module because there are so many different types of private lenders out there. So how do you choose the right private lender? What makes the private lender that you want to deal with? Why do you choose that private lender? I will say this, not all private lenders are equal. As you guys may know, not all lenders are equal, right? So what's your job? It's not just to get the deal approved, but it's to get it approved with the right lender for the right terms for that client. What makes sense for that specific client. So what are we going to look at? The front end, what you see that you're going to position to the client first, which is like rates, the LTV, the fees, the speed of how we can get this done. But I really also like to talk about the back end fees. What happens during the deal and what is the exit strategy, the flexibility, the communication, because that is going to help tie the client back to you, because you're going to be moving that client back to a traditional lending source such as a bank, right? So what we're going to cover on the front end, we're going to cover the rate, the lender fees, maximum LTV, approval speed, property type and geography, credit flexibility, underwriting approach. Rate. So this is for Interfinance. As of today, our rates on first mortgages start at $699, second start at $799. But you're not just shopping a private lender on rates alone, right? Because that's what I get a lot of questions. Hey, what are you going to price this deal at? What does this look like for you guys? But you're not shopping on rate alone, because let's just, for example, you can have a lender that's going to give you a 6.5 lender rate with hidden fees and slow closings. Can cost your client more than 7.5 with the lender with speed and transparency if you choose a different lender, right? So lender fees, our standard lender fees is between 2 to 3%. But I always tell brokers to look at and ask the lender all of their fees. What does all of their fees look like? Because one of the challenges is a lot of the times I've seen deals get to a lawyer's office and the lawyer is reviewing the commitment with the client, and it's like, well, were you aware of this fee, this fee, this fee, this fee? And now that's not the deal that they thought that they were getting. So hidden fees destroy trust. Transparency builds loyalty. So if you know upfront all of the fees that a lender is charging, you can then communicate that with the client in confidence, right? So you're telling the client confidently, hey, this is what it's going to cost. It's not going to be different when they get to their lawyer's office, because I've seen this happen many times. And then that's when I get a call. Hey, Stace, can you close this deal? Maximum LTVs. LTVs is a huge thing right now in the market, because guess what? The values are not coming in exactly where clients or brokers thought that they would be, right? So for Interfinance, our maximum LTV is 75% for properties under 1.5 million. For properties over 1.5 million, we do review those on a case-by-case basis, okay? Why this matters. We go up to 75. I've seen brokers that they are all looking for 80% on their deals. But I do ask brokers this: if you're looking for 80% on a private deal, then what is your exit strategy? Remember, we talked about that, and I'm going to talk about that again as we go on. But think about that as I go on with the presentation. If you're asking a private lender for 80%, what is your exit strategy going to be on the deal? So we talked about why would you position confidently a private lender, and why is it a great strategic solution? A lot of that has to do with speed. So for Interfinance, we can give 1 hour approvals on simple files with like no multiple properties, and we can close a deal when it really matters within 24 hours once the appraisal is complete, right? So what does that mean? That can save your client thousands, maybe hundreds of thousands of dollars, because you can close that deal because something happened with another lender, and now you need to close that deal ASAP. Speed is of the essence when it comes to private files. So when your client is facing a rush closing, speed is the difference between keeping their home, and when you put it that way, keeping their home or losing it. Property types, typically we look at detached, semi-detached, townhomes, and we do fund on condos here up to 65%. So keep that in mind, because we do understand that condos is a very challenging market right now, but we do still fund condos. But that is something that you do need to ask every private lender. Will you fund this type of condo? Ask about square footage. What is their minimum square footage? Is this a condo? Like, where is this condo located? Geography is a very big deal. Sorry. Geography is a very big deal when it comes to private lending. So as you can see, you can take a screenshot for us, but we are a lender that's only based in Ontario, and we do the major urban centers. So you can take a look at some of the lending areas that we do. And then there is a few more. So all you have to do is just give me a call, and I can talk about whether or not we can do that deal in that area. Credit flexibility, right? So Beacon score is a big thing. Lenders, a bank or B lender may do look at credit score requirements, right? Private lenders don't focus on credit, and that's one of the positives of using a private lender. We don't focus on credit, we focus on equity, exit strategy, not just the credit scores, right? So we've worked with clients with bruised credit, tax arrears. If your client has a tax arrear and we need to clear that up, that is something that we can take a look at. Non-traditional forms of income. So for example, if the client has a motel or a hotel, the bank may not look at incomes that come from these types of sources. We can take a look at those types of sources, right? But keep in mind with private lenders, the better the credit, the better pricing you do get. But it's not the only factor in approving a deal. Okay? Underwriting. We're really quick here on underwriting, but underwriting is a big deal when it comes to private lending. So where the banks take a look at, you have to be within a certain GDS, TDS for income requirements, but with private lenders, ratios don't apply with private lenders. We have flexible amortization. So for us, it's usually interest-only payments, right? What does that mean for clients? Since it's interest-only payments, they're not paying principal on their property. That means that their payments is a lot less. Does that give them better cash flow for their strategic goals that they're trying to achieve? That's a solution for a client. We also look at common sense underwriting. So we take a look at the full story. We want to know the full story. Every private lender wants to know the full story on a deal. So tell us upfront. Let me say that again. Every private lender wants to know the full story. Tell us upfront so that there's no surprises on a file, right? Back end. This is a big one, back end. And this is the stuff that we're going to cover for our back end: prepayments, terms, term length options, prepayment holdback, renewal options, legal and appraisal requirements, communication and reliability, exit strategy, and support, right? Okay, prepayment terms. So we do offer fully open mortgages on our three-month and 6-month, but you must ask a private lender if they do offer a fully open term. We do offer closed mortgages. Typically, it's our 12-month mortgage. Why does it matter for your clients? Because, for example, if they're going to sell in 8 months, do you need an open mortgage, or does the timing allow that they can do a 12-month term? If you're unsure about their timing because you don't know when exactly the property is going to sell, negotiate that upfront. Talk to the lender upfront so that you're not putting the client into a 12-month term, knowing that the client is putting their property up for sale and that they're going to need a different type of term for the client for that time. This is what we offer for Interfinance. We offer 3 months, 6 months, and 12 months. As I said, that our 12 months is our most common. So if your client is looking to sell a property, you're not going to, as I said, lock them into a 12-month term, right? Prepayment holdback. So Interfinance does offer prepayment holdback, which means that they can hold back funds to ensure the interest is paid, even if the client pays off their mortgage early. That's another big one for clients. They want to know, okay, can we cap that into the mortgage payment? Okay. It does protect both the lender and the client from surprises. So that's a big one when we talk about discussing strategies with the client and talking to them in confidence about what we're going to execute for the file, right? Renewal options. Renewal has become a really big question for brokers because not all private lenders are able to renew your client. Okay, so this is a big question. What happens if the clients can't exit in 12 months, right? So you had a plan and the client maybe didn't execute the plan, or it didn't pan out the way that they were supposed to. You need to ask the lender upfront, do you do renewals? Okay, so Interfinance will review the renewal options with the clients. We typically do renew, but we do discuss that with the broker. Okay, the broker is who we always contact, and that's who we talk to. You should always have a plan, though, for the exit, not just banking on the renewal of the lender, okay? So you're going to set client expectations early that private lending is temporary. We're supposed to be just a little bridge gap for a client. We are not a permanent solution for a client, right? So this is supposed to be only temporary. Legals and appraisals. So you must ask a private lender, do they have a approved appraiser list? Because it doesn't necessarily mean that all private lenders use all the same appraisers, right? So you're going to ask if we do have an approved appraiser list, and then you're also going to ask the lender or the private lender, what do their legal fees look like, and for example, what are appraisal costs? So our legal fees are ranging between $1,500 to $2,000. Appraisals anywhere from $500 to $800. Communication. Can you get your underwriter on the phone? I know you can't hear at Interfinance. Can you talk to the BDM? Is there somebody that you can always follow up and contact? I always tell all of my brokers, you can call me at any time. I had a client call me on Christmas Eve, right? The night of Christmas Eve. Stace, I have this deal. Can you do it? I tell my brokers I'm always available. Give me a call at any time because I want to make sure that we give you fast responses, clear communication, broker first service all the time, right? So you want to be able to submit a deal and get answers and just not, well, okay, we're going to work on, let me take a look, or it's waiting in queue for a client, because let's just face it, your reputation is tied to your lender's performance. Choose a lender that makes you look good. So if a client asks you a question, you can say, yep, hang on, let me get the lender on the phone. You can give me a call at any time and say, hey, Stace, I got this client. This is their question. Is your lender always available? Exit strategy support. Great private lenders don't just approve deals, they help you. They help you. They help you with your clients to exit successfully, right? So, do we want to renew a deal? Can the lender renew the deal? Yes. Maybe you have to talk to the private lender about that, but we want to make sure that your clients are exiting successfully and they were able to do what they needed to do with the funds. To now, you're going to bring them back to a more traditional source of lending, or they've been able to sell the property, right? This is our Interfinance advantage. 3 simple steps. We do clarity, simple underwriting, transparent terms, no surprises. Big deal there, no surprises. Convenience, we'll do 1-hour approvals, 24-hour closings. We have flexibility with no GDS, TDS, interest-only payment options, and we look at a deal by a case-by-case approach. Does it make sense? Is it common sense lending? What, like, for this deal? Does it make sense? Do you have an exit strategy? Does that make sense? That's what we look at for your clients. So, how do you submit a deal? Every private lender is different, but for Interfinance, you can find us on all of these platforms. But I would say take a screenshot so that you can see that, and you can also email in an application to me. Here's my email address there, and here's all of my contact information. Please feel free to take a screenshot of this, but also this presentation will be put on our Interfinance website, and the recording will be there, and you will be able to get a copy of this recording if you have, once you have already registered for the for this webinar. Action plan. So we've talked about how to approach a client, how to talk to a client with confidence. We've talked about how to address rate. We talked about how to choose a private lender. Now I'm going to give you your 30-day action plan to how are you going to execute that with everything that we've just learned, right? So week 1, you're going to review your pipeline. Those deals that got turned down from an A or B source, or even with another private lender, you're going to review your declines, right? And then you're going to talk about your client, and then you're going to schedule these meetings with your clients just to talk about, hey, were you able to do that financing? Maybe you've lost touch with the client. You're going to reframe your conversation, because we've now talked about how to not say, excuse me, oh, you got to go private. And now you're going to talk to your client more with confidence to say, no, this is a great solution for you, and this is why, right? Week 2, we're going to master your pitch. I would say do some role playing. Get comfortable with the numbers. Talk to your client about what exactly that they were looking for, how much they were looking for, and then you can show them with the private lending solution the numbers as to why it's still, like, why does it make sense to go here. And you can do role playing with other brokers in your office, or agents or brokers in your office, or I volunteer myself. If you want to do any role playing with me and we can go through that together, I am happy to do that. Feel free to send me a message anytime, and I'll be able to do that with you. So now you've done that. You've talked to your client. Well, first you're going to do the role playing. You're going to talk to your client. You're going to identify which clients can be private. And now you're going to submit your first deal, right? You're going to submit that deal into your private lender. So for example, you're going to submit that deal into Interfinance. And then, for us, I would talk to you about the deal first before you submit it in on the system, and that's what you would take a look at. And then week 4, you're gonna, you've closed your deal and it's time to celebrate, and you're gonna call me and be like, Stace, we closed our first deal, yay! Right? That's what we're gonna do. We're here to celebrate you. All right, so we're about to wrap up, everybody. Let's talk about the key takeaways of what you learned through this masterclass. For our first masterclass in our series, you learned 1, private deals aren't failures, they're strategic solutions, right? 2, we've learned your confidence determines the client's confidence. If you talk about it with confidence, the clients feel that, and then they are more confident in their goal and their decision making to say, yes, this is a great solution for me. 3, you're going to focus on outcomes and exit strategy, not just rate, right? Can't just be about rate. We're going to focus on why this works for this client at the time. You're going to choose a lender based on speed, transparency, and reliability, not just rate. You're going to look at their front-end terms. You're also really going to look at their back-end terms. You're going to build a clear exit strategy. And 7, private lending isn't a bridge. Oh, sorry, private lending is a bridge. It's not a destination, right? So what does that mean? That we are a stop, measure, gap. We're just here for a little bit of time, not a long time, right? Because you will have a clear exit strategy on how you are going to move the client and transition them back to a traditional source of lending. Just some final thoughts from me. The mortgage industry rewards brokers and agents who can solve problems, not just process applications, right? So use private lending as your secret weapon, right? It's not the ugly stepchild. It is a strategic weapon and that you'll have for your clients, right? So it's going to help you save deals other agents have walked away from. You're going to help build client loyalty, grow your business, right? So what did they say with G.I. Joe? Knowing is half the battle. So now you have the knowledge and you can go execute exactly what you, for clients that may have been declined or have walked away from you that you weren't able to close previously. I'm going to get into our question and answer period. So I'm going to exit our screen here. Okay, and I'm going to see, so does anybody have any questions in the question and answer box? Did everybody not see my screen? I was sharing it, so I just want to make sure, but I believe you did. What is your maximum term? Our maximum term is 12 months for a client. Is there any other questions? Okay. Do you have secure portal to receive client docs? So you're talking about a broker portal. We do not currently have a broker portal, but we are very quick and we do communicate with exactly where your deal is for a client. And for us, our underwriting is always available. We are open from 9 to 5 p.m. Monday to Friday. And of course, my cell phone is there. You can always give me a call at any time. Should you be registered with you before you submit a deal? No, you do not have to be registered at all. So, but before you submit in a deal on the system, please send me an email or give me a call so that I can review your deal ahead of time. And then I'll let you know whether or not you can submit in a deal. What is your maximum amortization? We do mostly interest only payments. So that should answer your question. So most of our deals are interest only, but we can do 25 years if we do need to do an amortization, if that's what the client is looking for. Do you offer seconds? And if so, behind which lenders? So yes, we do offer seconds. And we typically will go behind any A banks for seconds. We also will do seconds behind a chip mortgage, for example, a reverse mortgage. Yeah. And of course, B lenders as well. So if you're looking at some of the B lenders, we do that. Okay. Any other questions, please put in the chat box or the question and answer box. Yeah. So Nibbin, yes, we do go behind chip, which is a great solution because sometimes chip doesn't give the client as much money as they do need. So we will go behind a chip mortgage. Riza, no, we do not offer third position mortgages. So we only offer first mortgages, second mortgages. Please put all your questions in the chat in the question and answer box. What is your max LTV? 75% is our maximum LTV for first and seconds. However, if the client has another property that we can tag that has a lot of equity there, then we can look at raising our LTV if the client has another property that we can take a look at. But in general, our max LTV is 75%. So I do get, for example, I do get a lot of questions that brokers will call or message me to ask, do you go up to 80%? And once again, I would like to ask, if you go up to 80% on a private deal, what is your exit strategy? Be aware of that. Sorry, I'm just scrolling down. LTV behind a chip mortgage, 60%, I'd say around there, behind the chip. And for Jaya, I have a client who has purchased a property in London, Ontario. There's a railway crossing located directly behind the property. Could you please confirm whether this would be acceptable from a lending perspective? And if you would be able to consider this deal looking for 70%. Yeah, we would definitely take a look at that. But we would look at LTV if I could see the property. So Jaya, if you could just send me an email so I can take a look at that property, and I can let you know if we can do that for you. Thank you for that. Any other questions in our question box? Let me see. Thanks, Jaya. All right, no other questions. I do want to adhere to our time frame. So I'm just gonna wrap up. I am just going to wrap up. So I'd like to thank everybody for attending our first Private Lending Masterclass episode 1. So we will have another episode coming up shortly. And I didn't put it in this masterclass, but look out for episode 2. Episode 2 is going to focus, episode 2 will be, I would say, in the next month or so. So just look out for that. And I will be putting it up in all of our, on our LinkedIn page, our social media pages. If you are on our newsletter distribution list, you'll see that shortly. But let's review your next steps, right? So we talked a lot about executing your plan, how to do it in confidence. What is your next steps? So your next steps is, first, you're going to review your 30-day action plan, which I reviewed with you. Identify your first private deal opportunity. Reach out to me, hopefully, Stacy Brown. Submit your deal and start closing, okay? So just look out for episode 2. That should be coming soon, within the next month or so. I would like to thank everybody for joining today. I'm hoping everybody learned a lot. If you screenshot at the bottom of the screen, you'll also see that my information, my contact information is there. If you have any questions, feel free to email me at any time. Give me a call at any time. I'm always available. Thank you, everybody. Have a wonderful day and safe drive home. All right. Thank you, everybody. Bye.